Perfect. Thanks for coming, sir. Thanks for giving us this opportunity and for everyone.
Sure.
So I wanted to start from a bit from the past.
Yeah.
Like I've been following you since 2018-19, especially when that video of yours got viral.
Okay. Yeah.
So earlier you were doing a lot of positional stuff uh, in weekly options and monthly
Right.
options. I
Right.
remember. When did this intraday start for you?
Um, um, when I started, right, so during that time it was only monthly expiry. There was no weekly expiry. Uh,
Correct.
we don't have any options. But the good thing is that actually we had margin benefit. Okay, so we need to pay only the span margin. So thus, I was doing only short strangle in Nifty monthly one, and that was giving a good profit. And within a 6 months
Mm.
of time, right? So then I found this expiry trading. So I watched one of the video wherein I found the expiry day strategy, but it is not a straightforward what I was doing. It was a different strategy
Mm.
which we have to initiate around 255. Okay, so they
Mm.
sell options only at 255, which I modified to the expiry one. So once I found this expiry trading, then luckily or fortunate, I can say that actually they introduced weekly expiry.
Mhm.
So that's
Great,
how
great.
yeah, I landed into this weekly expiry. Yeah,
So you're saying you started around
yeah,
2016?
correct.
Uh, yes. So 2016, yeah, I remember that is when only the monthly expiry was
Correct.
there. So you used to sell the positional monthly, and for the expiry day, which was only once a month, you used to do the
Yeah,
expiry trading.
exactly. But during that time, we had exposure, intraday exposure. So we don't need to allocate
Correct.
any margin for intraday. So it was quite easy. You can do both positional and intraday.
Right. So when did this intraday 920 start? Like who introduced it to you? What's the story?
Actually, I would like to say that actually many people don't know that. People who attended my workshop, they know how I landed into 920 Straddle. I think 920
Right.
Straddle was there since 2017, if I'm not wrong. But I started doing only in 2020. Okay, how it started is
Okay.
actually I was doing a volatility arbitrage trade in Bank Nifty. Okay, so that was giving a consistent profit. Okay, so especially in high volatility when market VIX is more than 20, right? So you can do the volatility arbitrage. So how it does
Mm.
is very simple. We all know that the volatility in stock option is the volatility in stock is great. I mean, will be
Mhm.
good. IV is really good in stocks, and IV is low in index. That is a well-known truth. Okay, especially
Mm.
when higher VIX, then the higher the premium, right? So higher the premium in stocks, and comparatively, when compared to the stocks, the premium in Bank Nifty will be less. So I was
Correct.
selling options in stocks, and I was buying options in Bank Nifty according to the weightage.
Mm.
So how much weightage is there, Bank Nifty, and then HDFC Bank, right? ICICI Bank, State Bank of India, Kotak, and all these things. I'll be selling the
Mm.
options, okay, with one standard deviation, and I'll be buying the options in Bank Nifty for 1.25 standard deviation. Whenever there is a
Mm.
the credit goes more than 3% of the margin spent, then I'll be going and then selling this option, and I'll be making money. So this I had been doing for 6 months of time when VIX was more than 20, because we don't have a luxury of doing the positional one because market was moving up and down. So totally risky one.
Mm.
So this strategy
Mm.
is uh, almost totally hedged. Okay, but the one bad thing
Mm.
about this strategy is you don't get margin benefit. Okay, because you are selling options
Yes.
in stocks and you are buying options in Bank Nifty. And so
Correct.
the buying options I was doing in a monthly Bank Nifty because I want to hedge the monthly stocks. So I don't have a
Stop.
luxury of buying in weekly. And weekly, the time decay is also is going to kill me. So somehow I bought options in Bank Nifty for a hedging purpose for my
Mm.
volatility arbitrage. That was the history. Okay. So now,
Mm.
since these options or buy options are there, selling 920 straddle actually attracts only lower margin.
Yes.
Okay, and
Uh,
during that time actually they removed all this intraday exposure.
The excess margin.
Intraday margin is gone. Okay.
Yes,
So
yes.
thus, so for a free margin, so if you have to sell one lot of 920 straddles without any hedge, you have to spend 2 lakhs. And if you had this
Hmm.
volatility arbitrage, then you have to spend 1 lakh. So that is how I landed
Hmm.
into 920.
Okay, so let me just go over it. I know this strategy of yours is called
Correct.
Instocks, in which you sell the stock options
Correct.
because they have a higher
Correct.
IV, and you buy in equal proportion
Correct.
the monthly Bank Nifty
Correct.
options. But since you are not getting any margin benefits and you've already bought these options,
Correct.
you started selling intraday.
Exactly right.
Got it. So complete utilization of
Yeah,
margin.
from the day one.
Uh, all right. It was okay. Yeah, you must be a banker in your previous life, I'm
No,
sure.
I am a mathematician.
Uh,
Yeah.
yeah. So complete utilization of margin actually accidentally led you to the 920.
Yes, that's true.
And so when did you shift completely from this strategy to the 920? And are you still doing this the in stock strategy?
No, there are two reasons. Okay, so why this in stock strategy? I'm not doing it right now. Number one,
Hmm.
this in stocks will perform really well in high volatility. Okay, so
Hmm.
okay, if the volatility is less, it is then the premium difference between stocks and index is not so great. The volatility is
Hmm.
good, then the premium difference is good. Okay, so number one reason. Number two reason actually the capital. Okay, the volume. So you can't do the huge volume with this because you are dealing with the stocks. Okay,
Hmm.
so if you want to do, say for example, 500 lots or 1000 lots, it is going to be very tedious.
Right.
So I shifted to 920. So 920 was giving a good result. So then
Hmm.
drop and in stock still working, and we are back testing till now. Actually, it is working. Yeah.
Okay. So, Raghav, I just want to bring you in. Sir mentioned about something on those lines of volatility risk premium harvesting. So you were also working on something like this last month, and still are. So were you able to understand exactly what Sir was doing back then?
I think what Sir was doing was it's actually a from a volatility space. I think it's a correlation trade where you can take two positions, right? You can either sell the index and buy the component volatility, like buy the individual stocks, or rather buy options in the individual stocks and try to have some kind of um, risk neutrality by by trying to have some kind of like vega neutrality, right? I think the way Sir works is he looks only in the premium space, right? Sir, you look at the prices
Yes.
and you trade based off of the
Correct.
prices.
Correct.
So that is it's actually super interesting to just kind of see how you would size your trade. So specifically in this case, the there's a couple of issues that I know exist in this kind of a trade where you're trading index the index volatility or the index option component options. One is the execution, right? Because stock options are less liquid than index options. So like it's very hard to automate something like this, because you can't just cross the bid ask spread in the case of stocks if you have to put on a position, right? So for example, in the case of Sir, he wants to buy the index and he wants to sell the individual stock options. He's going to have to, and Sir does it algorithmically. Everything is completely 100% given to the algo. So there's a chance that because of a wider bid ask spread in the stocks, he'll end up um losing money just by executing the stock option trade. The second thing is the depth, right? So what he said very clearly, correctly, is that there is a lot of depth in the index options, but not so much, not as much in the stocks, right? So for every 1 unit of this trade that he wants to put on, he'll have to sell some amount of Vega in the options, or buy some amount of Vega in the index, and then sell an equivalent amount in the stocks. And just executing that, there's only a certain amount of capital that this trade can absorb before he actually starts moving the market, especially because he's doing this in stock options. In the case of index, you can trade an arbitrarily large amount. I don't know what kind of an amount you can trade before you actually start moving the index. But what would be really interesting is to understand from Sir how he would size his position. So in this correlation trade where he's buying the index and selling the component walls, because he looks at premium, right? Because he looks at the price space. It would be really interesting if he can go into how he would actually put on the size of a trade, assuming that VIX is greater than 20.
Yeah, as you said, actually, the reason why I dropped this strategy is mainly for the liquidity, and if the capital is less than 50 lakhs, you can always do. Less than 1 crore also you can do. But once the capital goes above 1 crore, it is you will have a huge impact cost. So that is one of the drawback. But this strategy will work for retails. Yeah.
Yeah,
The
that's
the size wise, it is very simple, Raghav. The thing is, the total number of contract in stock option you are selling. Okay, take say for example, it is called X, and total number of contract you are buying in Bank Nifty, say it is Y. Then Y should be greater than X. Simple. So your buy option should be higher than the sell option. So that actually I mean the net wise you are in buy options. Okay, so but you will have the credits. So so it's kind of back spread, you can say that. Okay, so you are selling more contract in stock option and you are buying little high contract in Bank Nifty, so that actually if market is moving violently, actually you will get a profit. You are right. Somebody will sell the options in index, will buy the options in stocks, but ideally speaking, the volatility is high in stocks compared to the index. So I started selling in stocks and buying in Bank Nifty.
the other risk I see in this strategy is that if HDFC Bank moves up and ICICI Bank moves down because of whatever reason,
Yeah, it happens.
the
Yeah, it
yeah
happens. For which
yeah
actually that is the reason why we are keeping one as the standard deviation. So thus, as
mm,
long as it moves within one standard deviation, it is not going to hurt you. But if it moves more than one standard deviation, then you need to have a stop loss. That's it. Yeah.
correct correct. So we know now the story of how you got into 920, which was which was optimization of your of this strategy that you were
Yeah,
explaining
correct.
in stocks strategy.
Right.
And 2020, I'm guessing, went well. 21 went well. 22 was also pretty good. I was checking out your PNL when I was doing a bit of research. Uh, Now let's come to the elephant in the room, which is 2023. Uh, right. I am so I have the data with me. I was collecting it, and the first 3 months were pretty good.
Yeah.
Actually, the first 4 months were decent, which you made around 12%
Right.
from January to April.
Right.
And the middle of the year, that is when the big drawdown started happening.
Right.
May was a massive blow
Right.
of 7%. June was also negative, and July was also negative.
Right.
So what do you think happened? A lot of our traders who are trading on AlgoTest also experienced something similar. I personally also experienced something similar. All of a sudden, this the strategy that was going well, things changed, and maybe the market regime changed, or the pricing structure of the options changed with respect to the movement in the market. So, what is your view on
What did
this?
you see, sir? Like, what did you see when you were trading live? What was, in
Yeah.
your opinion, what was going on with the strategies which reached drawdown? Like, what was your take on the market at that time?
Okay, so the take was very simple. We are going to analyze the data again. So what happened? So when you look at the data, right? So there are a couple of things I observed. Okay, so number one reason, it was true that before that actually you need to understand 920 straddle. Okay, so 920 straddle, it need not be 920, it can be any time, but we have taken a
Yeah.
time of 920. Okay, so 920
Yes.
you can divide into two sets. Okay, number one sets 920 with the smaller stop losses, that is mainly to capture the trend. Okay, mainly to capture the delta. Whenever the market is trending, it is going to give a profit. And 920 with the bigger stop losses, it's most likely to capture the data. So that is how it is designed. Okay, so 920 can
Mm.
divide into two categories. Okay, so now after 2020 or 22, okay, I will tell you the real problem. Okay, so when
Mm.
920 was introduced, okay, 2017 it was there, but it got famous only in 2020, 21, like that. Actually, during that time it was famous. Okay, during that time, you take the market, and the IV was very high, the volatility was very high, the premium was very high. Okay, it unrealistic, I would say that actually, because we haven't seen such a premium for pretty long time. Even you take
Mm.
previous scenarios, the high volatility period was very short period. It was not a longer period, but due to this corona pandemic, right, so this premium was very high for pretty long time than what we expected. Okay, since 2008 end. Okay, and till 2022 the premium was super
Mm.
duper high. So thus, okay, as I said, 920 straddle, let's call this one strategy is a trend following strategies, and 920 with the higher stop loss, let's call this is beta strategy. Okay, with the higher premium, okay, with the higher volatility, it is expected that the market will trend severely. That also we know that. So whenever there is a high volatility, the chance of trending is very high. That is also proven. Apart from this option, you take any stocks where the ATR is more than 2% of the underlying. Say for example, your stock is 100 rupees, okay, and ATR is 2 rupees, which means that the ATR of the stock is 2% of the underlying, which means that it moves 2% in a day. Okay, so thus, higher the volatility, higher the trend in intraday. So thus, strategy one will give a profit. Got my point?
Yes. So you're saying the higher the volatility, the higher the ATR, and
Higher
thus,
the trend
uh, yes, higher the trend. That is why a strategy with a lower stop loss will
will
work.
work. Okay, that is how it started
Yes.
giving a profit. That is the reason why. Number one.
Right.
Number two, you can divide that 920 into one more category. That is a 920 with the
Yes.
bigger stop losses. 920 with this bigger stop losses also has enough premium, so the stop loss is hit. Actually, you are going to make a profit because of the
Mm.
volatility. Okay, so you got both theta as well as a delta very well in the market where the volatility is high. So volatility is high, it is always good for theta and delta. That is a known fact.
Could you repeat that
The
point?
volatility is high, then both the
Yeah.
strategies will make an attractive profit. That is
Yes.
expected.
Okay. So okay.
That's
Yes.
expected. Okay, so this point, even I also missed it. So what we are looking in
Hmm.
2022, we are backtesting for 3 years. It is working, then it will work. That is what we are thinking. But in
Hmm.
recent times, I started doing all the stock trend following and all these things. Actually, I started
Yes.
exploring. Then when I look at
Right.
the market, then only I realized that actually the higher the volatility, higher the trend.
Correct.
Okay, so higher the premium, higher the profit. So
Mm-hmm.
So in 2022, okay, the volatility started coming down. So once the
Yes.
volatility started coming down, the chance of making higher profit is also less. It doesn't matter whatever strategy you do. You do 920 strategy, or you do the trend following, or you do the mean reversion. Lesser the volatility, lesser the profit in trading. Any kind of trading goes.
Hmm.
Okay, so number one, that we have to accept. Okay, number two,
Okay.
okay, this is the first reason. Okay, so why the profit is
Right.
not coming to the plate since 2022? Simple, we are
Mm-hmm.
entering to the low volatility mode. That was a major reason. Okay,
Hmm.
second reason, uh, it is also true many people started selling options because of the awareness in recent times. We are into the digital world, right? So now everybody is everybody knew about option selling right now, because when I came to the market in 2015, people thought that, even I also thought that, people who are coming in BMW and Benz car only will sell options. Okay. But right now, actually, everybody can sell options. Okay, everybody is having a knowledge. They are having
Correct.
good accessibility where they can check how to sell option and strategy. So, thus the premium also came less. Okay, how I am saying the premium also came less. Okay, simple reasons. You take the ATR right now. Okay, don't take the VIX. Okay, because VIX is based on the monthly premium. Okay, though let's take a ATR. Okay, ATR. Say for example, yeah.
So, sorry, I'm just stopping you. The ATR for the Nifty spot.
And
Is that
anything,
correct?
yeah, correct. Yeah,
Any.
ATR, Nifty or Bank Nifty. Okay. So
Okay.
if you are, say for example, right now we are having, let me go and check the ATR right now.
Yeah.
Let me check the Nifty ATR. Okay.
Sure. I'll do the same.
Yeah, Nifty ATR. You can check it for any time frame, not an issue. Okay. Nifty ATR right now it is 200 rupees.
200, correct.
So 200 is nothing but
For a daily
for a
time
daily
frame.
time frame. Okay, 200 is
Yeah.
nothing but 21,000. The spot is close to 21,349 right now. The close. Okay, it is less than 1%. Okay,
Yes.
but if you look at the same 1% ATR in the previous history in 2017 and 2016 and 18, the premium was little high.
Okay. Okay.
Comparatively, say for example, Nifty would have been 10,000 and the premium would have been 100 rupees. Right now, it should be 200 rupees. Okay, so
Right.
close to 20% premium has come down due to the liquidity in option selling.
Due to more sellers coming
Yeah,
into the
supply and
market.
demand. It is purely and
Supply and
supply and
demand.
demand.
Okay.
Okay, okay.
Okay.
So these are the two reasons why the profitability started coming down in since 2022. Okay. Okay. Yeah. To answer this question.
So yeah. So yeah, I'm sure you've done a lot of research on this, uh, and
And
definitely.
before that, I'd like to say one more thing. The reason is very
Yes.
simple. In 2022, what we do, simple, go and pull all the time, all the stop losses, whatever it was working. So put the combinations on whatever. So it was giving a profit in 2000. I am 21. It was giving great profit, and 2021 it gave moderate profit. 2023 we entered into the very, 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 very low volatility with low premium, and that's where we're struggling.
Right. Right. So
The question,
yes,
sorry to interrupt,
please.
Chintan. So the
Yes. Yes.
question would be, for people who are coming to trade in 2023 and they follow your style of trading, right? Where at least the style of trading that they understand, which is that you have different strategies, mostly intraday, different entry times, different stop losses, different permutations and combinations that are run along with a portfolio level stop loss. And if I remember correctly, please correct me if I'm wrong, sir. You are an option seller. So how do people navigate 2023 given what you have said, right? That premiums are depressed because of the influx of option sellers, while the average true range has not changed much. So how as an option trader can we navigate specifically on the selling side? How
Yeah.
can we navigate this kind of a market environment?
Raghav, I just want to add the average true range has reduced. That is why the trend is not being made in the market. If correct me if I'm wrong, sir.
Yeah. If ATR is high, then the market will trend do the intraday really well. Yeah.
Right. So yeah, going back to Raghav's question, like how do we? So now that we have identified the problem, how do we tackle it?
Yeah. Okay. Okay. Coming back to this. Okay. So
Yeah.
since why we are making profit in sometimes in trading, right? So when you make profit, you never know whether you are making profit out of luck or you are making out of the system. Okay.
Okay, profit attribution is not there.
So we never know, right? So, and especially
Yeah.
when you sell options, you are being with the mother. Mostly, actually, all your mistakes will be forgiven, and you will make a profit. Um, so thus, in 2022, it was 2021, it was a great profit, and 2020 it's a moderate. So with low volatility, with this current market also, the profit is coming, but you
Right.
need to understand that the kind of drawdown you are going to get, if you don't understand the market dynamics, you are going to make a loss. Okay, you are not going to make a profit. Why I'm going to say? Okay, let me explain this. Okay, so again, coming to this 920 straddle, there are two portions, as I said. One portion is mainly for trend following. Okay, one is mainly for trends, that is for delta, and another one is mainly for time decay, theta. Okay, now if you are running the backtesting based on 5 years backtesting, 7 years backtesting, if you are running, you are digging your own graveyard. Why? Because 2018, 2019, 2020, 2021, it is not a realistic premium. It is a higher volatility. It is not going to be there, at least. Okay, so don't do, if you are doing the quant based on only the low volatile days, then you will understand the pattern. And if you are doing a plain vanilla backtesting, then you will not understand the pattern. That's what my understanding. Okay, so we are into low volatility regime, we are into normal regime, and doing backtesting something where the premium was 3% of the underlying, 4% of the underlying, now it is not going to work because the setup is not safe. Okay, so you have to do the backtesting in the low volatility period. Okay, okay, now if you do the volatility backtesting right now, okay, if based on the volatility right now, you will understand the logic clearly. Okay, go and check the any trending strategies. Okay, either it is an intraday or positional. Okay, most of the move, it happens only in the first hour, 9 to 10.
Right.
Okay, and very lately market will trend severely in the maybe in the last hour, but generally market doesn't trend in the after 10 o'clock. Market doesn't make a big move at all. Generally it doesn't make much move. Big move will come only in the morning. Okay, so if you do the quant, if you do the analysis of the data since 2022 till now, right now, you will understand that smaller stop losses will work before 10 and bigger stop losses will work only after 10. Getting my point?
Yes.
Okay,
Yes. Yes.
so smaller stop losses will work in the morning, and when you say smaller stop losses in low volatile also, the market will trend, but generally it doesn't trend really well. Okay, so thus you will
Yes.
go through the drawdown if you are applying the small stop losses. Okay, but it is going to give a profit when there is a trend in the intraday, but you have to wait for it. But this is not the case like what you had in 2019 and 2020 or 2021. Okay, and so my take is, actually, if you have to design the strategies especially for this low volatility, you have to divide your strategies into two categories. One is for trend, one is for theta, as I said, and you have to play for a trend from morning 9 to 10, and after 10 you have to play for a theta. That is the optimal profit you will get it for this low volatility.
Okay, so just to summarize a bit, uh, first of all, you've spoken about the backtest period or the backtest data.
Right,
If you backtest on the entirety of the
right,
data, it won't be representative of the current times.
correct.
So, should we reduce the backtest period to 1 year, if or put a VIX filter into it?
Yeah, that would be better actually. If you are putting a VIX filter, that would be better.
Okay, so maybe put a VIX filter between 10 and 15, and whatever trades, only look at the data from those periods.
Exactly.
All right, so that's number one, and number two, that a special interesting thing that you said is market is only trending in the first 1 hour. So have your trending strategies in the first 1 hour and have your non-directional theta strategies afterwards for the later part of the
Correct.
day. Okay, so that is
You can have you can
something.
have 20%. Say for example, 9 to 10, you can have 20% theta strategy. Likewise, after 10 o'clock also you can have 20% trend following strategy. But
Okay.
predominantly, you should have a trending strategy in the morning.
So yeah, the mix changes. That's essentially what you're
Yeah,
saying.
this is not my opinion, and based on the data, if you go and check it, actually, that is how it goes.
Hmm.
From 9 to 2:30, I have scanned all the strategies with the smaller stop losses to higher stop losses and adjustments, everything.
Hmm.
So, say for example, 10,000 strategies are working from 9 to 10, and 8,000
Hmm.
strategies are coming as trend strategies,
Hmm.
and only
Got
2,000
it.
strategies are
Yeah.
coming only for the time decay. So that, based on the data, you can say that actually it is working. Yeah, based on the sample only, I'm saying yeah.
Yes. No. No. I got that. I understood that. But that's a pretty good insight on how to, you know, how you are navigating these low volatile, low premium days. Uh, so I just want to know, like, at what drawdown level do you stop trading a strategy and you go back to back testing, or you're always back testing and finding
Uh,
new strategies?
you know that actually whether I'm making profit or whether I'm making loss, I do the backtesting part. Yeah, 9 to 6, my job
Okay.
is only backtesting. I don't do any trading. Yeah.
Okay. So, at do you have a specific drawdown level at which you stop the strategy?
I thought that
Like,
15% I would stop. In fact, actually
hmm,
before 10 also, I think 7 to 8 I stopped for a week of time.
for a
For a week
brief.
of time.
Yes.
Even
Yes.
if you look at the 920 start, I was 2022. Still now it is profitable. The only worry is actually it is going to hit your portfolio stop loss.
Hmm.
Okay,
Correct.
so if you are having a good position size, still it right till now it is making a profit.
Right.
Okay, so the only thing is actually if you are running it for smaller capital, then your portfolio stop loss will hit. Okay, so
Hmm.
right now the challenge is right now, the learning in 2023 is, okay,
Hmm.
uh, you design your strategies for low volatility. Number one, when you do the portfolio
Hmm.
of backtesting, so don't look for higher profit. Don't look for a EOD drawdown, and look for an intraday drawdown. It is very important. Okay, so people look only for a drawdown. Okay, so your drawdown is not needed.
Right.
Okay, say for example,
Hmm.
your drawdown is only 10,000 rupees, but intraday it goes
Hmm.
to 1 lakh and then coming to 10,000 rupees in the end. What is the use?
Hmm. Hmm.
Okay,
Correct.
that's called system drawdown, which I learned from Ami Broker. Ami Broker, it shows the system drawdown. Okay, so the system drawdown is the highest peak drawdown you will see in the screen in live.
Okay.
Okay,
So, okay, you're running your portfolios every day. Maybe on a weekly or a daily basis, your drawdown is, say, 10% of your capital. But on an intraday basis, it could go to, say,
yeah,
25% or
yeah,
30%.
that is important,
Yeah.
right? That is where the psychology is going to
Right.
work, right? So
Psychology. Yeah.
today,
So actually that brings me to the next thing. Like during this drawdown period, like, have the data around
yeah,
10%, if I'm not in wrong. Like, how did you manage your psychology? That was also one of the questions we received. Like, what did Jagan sir do to manage himself and his psychology, that 3 month negative months? I don't think you've seen that ever in your trading
yeah,
career.
I haven't seen ever.
Yeah.
Yeah, so once we are entering into system trading, we have to accept it. If you are a discretionary, then you can do the modification and then do all jugglery
Yes.
action, right?
Jugglery, adjustments and
Adjustment.
all that stuff.
Right.
Keep selling, yeah, doing the martingale sometimes and all that stuff. So how did you psychologically, how did it affect you?
Okay, so why it did not affect me much? Number one reason, to
Hmm.
be very honest, so far I made so much money
Hmm.
in the market. Okay, number one. So
Hmm. Okay. So, okay.
And moreover, actually, so there are something which I can't discuss in the space as well, right? So, but still, if you are
Right.
putting into
Right.
the prop and then you would have double your money, triple your money in the prop, so it is
Right.
not
Right.
psychologically, the money wise, it is not going to disturb you. Okay. And why?
Hmm.
And definitely for retail, it is going to be a painful one because so far it
Hmm.
was giving a consistent profit. Right now, it doesn't give. Actually, it really pains. Okay. And
Hmm.
statistics, I mean, strategy wise, right? So the number wise, okay. So when I did a so I got confused actually why it is not giving a profit. Okay, so
Hmm.
especially for a weekly expiry, Bank Nifty it's supposed to give. Why the portfolio stop loss is being hit
Hmm.
multiple times. So one thing what I understood is actually the position size is really high. Okay, so before that actually I was selling options almost for 30,000 one lot. Okay,
For how much?
30,000,
13.
30, 30
Okay. For the straddle.
for a straddle. So I'll be doing a lot of
Oh my
straddles. So
God.
the
Yeah.
one reason is, yeah, high volatility period, it was giving a profit. So we enjoyed in 2001, 21, 22. Right?
Yes.
So right now I have reduced my position size for
Hmm.
two reasons. Okay. Number one reason, it more the position size, more the profit, more the loss is fine, but heavy intraday loss. Heavy intraday
Hmm. Hmm.
MTM loss. It is not a realized.
Right.
Say maybe it is going to 1 lakh loss and then it is coming to 10 lakhs profit. Okay, but you
Hmm.
are entering into the heavy intraday loss. The chance of intraday loss is heavy. Okay, number one reason. Okay,
Hmm.
so I have reduced my position size. Number one. So
Yep.
number two, I started thinking that actually, so we are entering to low volatility mode, so we have to do some adjustments. So I started doing some research. Okay, we cannot do the plain vanilla model what we were doing before. So I started changing
Hmm.
all my strategies according to the logic what I said. I had all trending strategy in the morning, and after actually I
Morning.
had all DK strategies. And till
Hmm.
now, I would say that whatever the strategy I had designed is based on the lowest intraday loss. It is not a realistic loss.
Hmm.
It is not EOD loss. Okay, EOD drawdown. It is
Hmm.
based on the intraday peak loss. Okay, so that the correlation what I have written is based on this. Okay, so now
Hmm.
the question is, according to the backtesting, what I have seen from my strategies, these strategies will outperform when there is a worst thing in a market or best thing in a market. Normal course, it doesn't make a big profit.
Hmm.
In other words, when there is a super highly volatile market, a normal strategy what I was doing before would have hit a portfolio stop loss, but this strategies will
Hmm.
not hit a portfolio stop loss, and many people will not see it. They see that loss, 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 but the loss will be
Right.
less. Okay, it is not going to hit a portfolio stop loss. And
Hmm.
if I had been running the previous strategy by this time, it may be hitting my portfolio stop loss. And the same thing when there is a flat market, when there is a trending market, this strategy will give profit. These strategies will give a consistent profit in long run. But unfortunately, this 2 months it was a challenging period. I think it is in profit only.
It you're still in
It is
profit.
in
I
profit
yeah yeah.
only.
Yeah.
But the best time has not come yet. Yeah.
The, so just summarizing, you have optimized for intraday uh, drawdowns or intraday losses
Correct.
rather than your daily or your weekly or your monthly drawdown.
Yeah, EOD even daily drawdown is not needed. You have to look only the intraday drawdown.
Intraday drawdown. Got it. Got it. So, then just moving on, then after the 10% odd drawdown, you had an amazing August. I think you changed a lot of your strategies. That is when all the things you're saying you probably implemented. Then came the NSE going back and forth on when the expiries are going to happen. And eventually in September, we come into this daily expiry or DTE0 trading.
Right.
Right. So it's been around 3 months for that. So what is your opinion? I know you trade only expiries now.
Right.
You've completely changed it. Like, so what has your experience been? Number one, do you think it's an opportunity, or do you think it is like new guys who are coming into the market should stay away from?
Okay, there are two things, right? So one I'll explain theoretically, another one I will explain based on the results. Okay, people
Right.
feel that actually after introducing the daily expiry, it is very tough to make a profit, and that is
Hmm.
the result. Okay.
Right.
But that is my opinion. That is not based on the daily expiry issue. It is based on the low volatile market. That's what my feeling. But once you enter into high volatile market, or once the premium is good, 5 days, 5 expiry, you will be a billionaire. Okay.
Hmm.
So theoretically, if you ask me this question, 5 days, 5 expiry, it is good because it is proven that the age for expiry trading is really, really high, okay, than
Hmm.
non-expiry day. Okay.
Hmm.
Let me put in another way. Okay. Right now, with the current market conditions, if you are running non-expiry strategies also, you will make a loss. Okay. So it is not a problem of expiry trading. It is a market regime issue. Okay.
Hmm.
So I would say that 5 days, 5 expiry, it is always good. But the thing is actually, since we are into low volatile market, we have to accept the slow profit making uh, process right now. It is not going to be every
Hmm.
day and then we are going to collect the money. Okay, so we can reduce the
Right.
position size, and definitely there is an edge right now. Definitely there is a way you can make a profit. You can make, yeah.
Uh, I got it. So you're saying it that historically the data says that expiry trading gives you a better edge. Number one, and number two is it's not like trading on any other day is also gonna increase your chances.
Exactly, exactly, exactly.
So it's better that you trade the expiry, and even if you've been trading say intraday 920 earlier, or you just starting it since past few days, it is better to your data says it's probably better to do the DT zero trading.
Of course, there is no doubt.
So these daily spikes and on that we are seeing in the market, it's called the injection, very famous on Twitter. uh, so this is a result of, I'm guessing, the DT zero, trading, everyone's stop losses are hitting at the same time, the order book just all the order book finishes. So what do you think about that?
Uh,
Should we
yeah, I think it
Yeah.
may be possible. What you said is possible because I'm getting a huge slippages in recent times, especially in the last quarter.
Hmm.
Okay, otherwise I would have been a very decent profit. Okay, so very great profit.
Hmm.
So the slippages what we are getting is really really high. Yeah, true.
Yeah. So especially if you're doing with the kind of capital you are and the quantities that you do, do you think SL based on the underlying would give a smaller slippage? Although I know that can only be basically market order or just sending the order up once you receive it in your price feed. You can't place it in advance. Do you think that is one way to avoid
Yeah,
it?
yeah, true, true, true. Based on the underlying is always true, but if you don't put a stop losses, that is also one more risky part. So that also we have to understand.
Yes. Yes, if the broker goes down, then you're
Then your positions will not be squared off, right? So that is also risky.
right, right. So, okay, so and what is the leverage that you are doing now? Like earlier, you said for you were selling the straddle at 30,000. Are you back to your old position
No,
sizing, or
no,
have
no, no,
you
no. Right now I'm selling options, maybe 75,000 one lot.
75,000? Okay. For in the so the current, I think straddle is the broker charges around 1 lakh
I'll
20
be
for
I'll
the
be buying the hedges. Yeah,
buying
yeah.
the edges. Are you incorporating some buying strategies as
No,
well
no,
now?
no, no,
Like, have
no, no,
you
no, no, no,
changed
no.
tact or something?
Buying strategy I backtested. If you are keeping it till EOD, you are not going to make a
Hmm.
profit. You need to capture only the momentum. But I'm not so good at capturing the momentum till now,
Got it.
especially in
Got
intraday.
it.
Okay, so.
Right, right.